All right, guys, I thought I would do something different. I thought I would do a very quick midday video for you guys. Just, this market has been moving so fast this week, and clearly there's a lot of big events. And I thought I would just kind of provide a little bit of perspective to what's going on in the market. I've been doing this for a while, and I, always have the assumption or the understanding that this market's going to do whatever it wants to do, right? You could do all of your analysis and think that, putting together various different pieces of the puzzle in terms of the macro landscape or any other thing else that you basically hear, but, always with the understanding of that the market will just do whatever it wants to do. So first of all, like, what is going on with some of these moves? We've now seen what the Qs are up 16% so far for the year. I mean, and look at the move today. The Qs are up 3%. So, and then of course you look at what like the diamonds are doing, which are actually down on the day. So how is this happening? What are some of the underlying reasons for this? Well, again, before I even give you my take, it's important to basically think about just being on the right side of the market. Sometimes you don't need to know all the reasons, but I will add a couple things just to give you a little bit of perspective. Remember, as we kind of came into the beginning of this year, there was a lot of things that were happening, right? There was tax law selling, which really kind of drove a lot of stocks down, underperformers that were already down a lot year to date, and they went down even further. So it's almost like, stretching a rubber band, right? And with all of that selling that was happening at the end of the year, the rubber band got stretched further and further and further. And now what you're seeing is kind of a snapback because things aren't as bad as what people were, originally thinking coming into this year. Right? Every analyst, well, I don't want to say every analyst because that's wrong, but a lot of analysts were thinking, what I kept hearing was, hey, the first half of this year is going to be really bad. The second half of the year could be better, right? So the positioning was very bearish going into some of these events, right? And today's, it's obviously just one day and a half a day, but look at some of the names that are moving up. Blockchain stocks, internet stocks, right? These are the areas of the market that were that the rubber band was getting stretched the most. And if you want a little reasoning behind that, look at the short interest in some of these things, right? The short interest is in some of these stocks is well over 10%. So when people really get caught off guard, right, you could see this kind of ferocious move, with momentum to the upside because you have shorts covering and you have people who are watching momentum and they're also buying as well. So, you see a lot of names that are up double digits just for today and up much more than that. Some names are up 40-50%, and Meta is a good example of that too. So that's a little bit of the reasoning. Let's talk about, trading for a minute, right? I talk a lot about, trading what you're comfortable with, right? Everybody has different preferences and different conviction levels. I always kind of share in my videos in my trading room, what my thought process is, and I think there's good opportunities, but some of the opportunities could be for day trading, right? I took a position in Zillow. Right. This is another name with high short interest. Do I really feel comfortable about owning Zillow for, much more than a day trade? No, I don't, but that's me. I mean, other people could feel very differently. Like they could think that there's good value in Zillow, right? Or in a firm or in an upstart or, a lot of names that are moving with momentum, right? So you can kind of think about it in terms of if you've got low conviction, but you want to participate, well, think about those in terms of day trades. Other things, right? I feel more comfortable owning, right? A Boeing, even though it's down today, I'm adding to it a little bit, right? And a CRDO, right? Which, this is something, even though, it's also a momentum name, I feel a little bit more comfortable with because it's also out to 52-week highs, right? Versus a name that was just, had the rubber band stretched too far. Right. So, to me, it makes a world of difference if a name is breaking out to new highs and showing market leadership versus, hey, it really just got way oversold and people were shorting the heck out of it. Right. So that's something too. Another something else that I wanted to cover really quickly too is just the rotations too. A couple weeks ago, what we were seeing is kind of more of an everything rally because breadth was expanding. Now it kind of feels like something might be changing a little bit, right? For example, the Qs are up over 3% and the diamonds are down on the day. So, there's some rotation going on. I shouldn't say that it was an everything rally. We in the beginning of the year, because we did see a rotation out of the defensive areas of the market, right? The XLP, right? XLV, the healthcare, this is something that it looks like it continues to see a rotation out of areas that people were more comfortable having some energy exposure, but more in those lower volatility areas of the market. Well, those are seeing some rotation out of, and that's, healthy, but, at the same point, even though you see like the Qs going up this much and SPY's up 1.3%, it's not a time ever to really get complacent. Right? Because if you're in some of these areas that are getting, rotated out of, then, it could be particularly a painful experience because, you look at some areas like OIH, which is down over 3% for the day. And, I've been kind of, picking up the breadcrumbs or kind of, trying to kind of, pick up some of these clues that we're seeing in the marketplace. And we know that the energy stocks did really well. So it makes sense to me to see some rotation out of these areas, right? So, again, everything is based on your comfort level. So if you were way overweight, energy, maybe now you want to kind of reduce that back to like a market exposure or even an underweight, right? Those are the adjustments that you could do. And by the way, I haven't said it in this video, but of course, everything that we're talking about is for information purposes only. I'm not giving out any recommendations or advice. I'm just basically telling you what I see on the tape, which is a lot of rotation that's going on. A couple other things that are good to watch, right? I just saw Joe Fahmy tweet about, only, and Brian Shannon talking about only price pays, right? And follow price. It's very important to be on the right side of the market, right? And kind of get some of those opinions, right? Those perma type opinions that people, have had and kind of built up a little bit, right? Try to be nimble, right? And kind of pick up on some of these moves. But I think, the overall market and analysis, people really got into like the macro and thinking like, hey, geez, it's a very complicated market as it was in 2022. So they really kind of jumped into macro, right? I'm very much a macro person too. I look at macro and micro, but try to keep it simple with some of these things too. If you overcomplicate it, right, then you're not paying attention to the most important thing, which in my opinion is price, right, and being on the right side of the market. So yes, looking at the dollar, looking at bonds, those are two things that I look at to see if anything is really changing, right? I mean, and I've talked about this in multiple videos, but if the dollar starts to shoot back above the 200-day moving average, right? Or even the, moving, because that's a far ways away, but even above the 50-day moving average, right? Then there might be something changing in the market, right? And why is the dollar important? Because usually it's a flight to safety, right? And that's what we saw in 2022 with this big move in the dollar. It was a flight to safety. It was risk off, right? Well, right now we're not seeing that, right? Another trend that we saw, again, just looking at a couple things, but trying to still keep it simple, is what are bond yields doing, right? Well, we're looking at bond prices, which is inverted to yields, but the volatility really kind of came out of what was going in bonds, right? I put this chart and people get mad at me sometimes because I don't give them what they're looking for in terms of an answer. Sometimes I want people to think on their own, but I gave this chart out earlier in the week, right? This is a proprietary index that I think it's Bank of America that uses, right? And it basically, there's not an easy way to capture volatility in bonds, but they try to basically do it, and they use this index. So what is the volatility coming down in bonds telling you, right? Well, it's basically saying from what we saw in 2022, when yields shot up, like a rocket and really started to affect equities, right? We're not seeing that currently. Volatility is actually coming out of bonds, right? So that's a good thing. And if you have a tough time getting your head around the volatility in bonds, well, just look at the price, right? So it's, this was a big no-no for equities, was to see bond prices go lower and yields go higher. Now we're not seeing that, right? We're seeing more of a sideways pattern. Now, of course, that could change. So we want to keep an eye on these things. All right. And I'll just kind of wrap up this video too with, you know, understand that as fast as this market is moving, you're not going to catch every trade, right? There's a bunch of trades, right, that I've been in and out of, the last week or two. I'm not going to carry, be able to take 100% of profits from every single trade. The market is just moving too fast. So, realize too, as you're trading, that you're not perfect. You're not going to catch every one, of names that are on your watch list. But you try to trade them well, and also continue to be disciplined with what you're doing, right? If you get into a trade, put a downside alert on it, right? Put a target out on it, right? The more methodical that you can be with your trading, the more that you're going to make it a little bit unemotional, and you're going to make it more mechanical, rather than have your emotions run high. All right. So that's it. I just wanted to share some thoughts midday today, which is the 2nd of February. Have a great day, everybody.